Hello and a very warm welcome to all the viewers. This is Manoj Dara. So cryptocurrency prices are mimicking stocks and bonds like never before, penalizing investors who acquired Bitcoin and other digital assets to diversify their portfolio. Because central banks increased the supply of fiat money in 2020 and 21, crypto prices surged, and now the Fed is tightening. Crypto and equity markets are correcting lower. Digital asset investments products saw inflows totaling $9.3 billion in 2021, which is up 36% from 2020. While the rise from 2019 to 2022 was far bigger at 806%, total asset management in 2021 end was at $62.5 billion. For several years, advocates of Bitcoin, Ether, and other cryptocurrencies claimed they could serve as alternative investments that help set off losses in investment portfolio, or at least cushion any declines in stocks and bonds. These arguments, among others, help convince more hedge funds and other professional investors to include Bitcoin and Ether in their portfolio. Well, Morgan Stanley said the increased involvement of institutions which are sensitive to availability of capital and therefore interest rates has contributed in part to higher correction between Bitcoin and equities. Retail traders were dominant around 4 years when Bitcoin traded below $10,000. A trade of thickening volume and Coinbase exchange from retail users in 2021 have fallen from 80% in 2018. But that has fallen over the years as institutional interest has picked up as per Coinbase's business model adjusted to accommodate institutional needs. Well, Morgan Stanley also opined that increased trading volume share of crypto institution versus retail has contributed to higher correlation between Bitcoin and equities. Large funds such as Cathie Wood's ARK Investments Management LLC and companies including Elon Musk's Tesla and Michael Saylor's MicroStrategy have purchased Bitcoin, moves that has helped financial markets become more aligned with the crypto markets. Meanwhile, crypto-related companies such as Coinbase Global Inc. have gone public over the past year or so, which has further connected digital trading markets with the stock markets and bonds. Citigroup is of the view and also mentioned in a research note that within the equity sector, crypto assets appear to exhibit an increasing correlation to the cyclical stocks, in particular sector which are more inflation sensitive such as energy, materials and industrials. Citi Research also noted that market volatility and inflation expectations share a similar negative relation to financial market volatility, and even notes that they find a weak statistical association between crypto returns and inflation expectations. Both of these attributes have only become prevalent recently and has been distinctively weaker historically. The 3-month correlation between cryptocurrencies, Bitcoin and Ether and the major US stocks indices hits its highest level on the record between 0.67 and 0.78 last week, according to the Dow Jones market data. The correlation of 1 suggests the markets are moving in lockstep, but 0 say they aren't related. The 1 and the 2-month correlation are at the record levels. Market participants opine that the correlation between Bitcoin and equity indices has remained high and will continue to do so unless Bitcoin becomes widely used as a medium of payment, which looks unlikely to happen soon. The correlation is now on the test as Fed hikes interest rates and unwinds its balance sheet. Whether it will continue, we will know soon as Feds unfold its stance. Keep watching Crypto TV for more such interesting updates. This is Manoj Dara signing off. Thank you.